Good morning, good day. Hi, Jen B. Hi, Vejisan. Hey, Nick. Hey, Vincent. Hey, BL. How you all doing today? Good to be back. I realized something funny. I deleted the wrong stream. So I was intending, yesterday we didn't have a session, right? So I was intending to um, delete the stream, the setup for yesterday, but I ended up deleting today's stream. So I had to quickly jump onto creating one for today. So all good, all good. I look tired. I am. I went back, crashed for a while, got up, did some work, and then crashed again all through this morning. So it's been a long, long day, long couple of days, long 2 days. But like Surin asked, any yen trades? I did get into a yen trade. I get into two yen trades, one quick scalp and one slightly longer. So, you know, whatever can brighten a day, or one thing that can brighten a day is making good trades. So that's definitely a plus. Good morning, Vel. How are you doing? We'll give it a couple of moments before we get started. In the meantime, if you are new to the session, you all know the drill. Drop a message, say hi, let me know where you're joining from. If you haven't already, the Discord channel is there. Do click on the link and join up. It is absolutely free to join. Um, Purpose of this is to have a community, just so that we can all share and chat more beyond this session. I do look for members who are going to join and contribute a lot more. Chat, not what I would. Sounds really bad, but not zombies who just come in and sit there and observe. So we look for contributors. Hey, Jan Peterson, good to see you from Denmark. What time is it in Denmark? Must be early, early in the morning. Quite early in the morning. It is the last trading day of the month. Um, Very quickly, isn't it? Very quickly, we're in May now. We're coming to, before we know it, we're in the middle of the year. So interesting. Hey, Goju, how are you doing? 9 a.m. Okay, that's not too bad. I know big shout out. Pedro's probably not going to watch this session today, but Pedro's in South America and it's like 3 or 4 a.m. in the morning for him. One more minute and we shall get started. If you are on TradingView, do me that big favor. Click on that little rocket ship button on the stream. That's a bit of a boost. So I think it helps us get found easier and by more people. And if you're on YouTube, do click that thumbs up button. If you haven't already subscribed, then subscribe to the channel as well. Okay. Hey Angel Case, how are you doing? Alrighty, let's get started. So today, daily market analysis. What we do here every day is at 3 p.m. GMT plus 8. I do this daily market analysis to share with you my views on what happened in terms of the fundamentals since the last time we spoke, and what's coming up, things to pay attention to. Looking at the technicals in terms of the price charts, where is price at? Where is it possibly bouncing off or breaking through? Combining that together, fundamentals and technicals, we look at some possible trade setups, um, mostly across the major currency pairs. But if you do have any questions, any particular pairs that you want to or you would like me to look at, then do put it into the chat. Let me know. I'll be happy to share with you my views on whichever pairs or instruments that you want to look at. Okay. I do jump into a lot of the trades that we analyze here. Sometimes I do get out a bit earlier, especially when I got a stream like that, then I don't want to be monitoring the price or the charts, right? So I do get out a little bit earlier, or you know, sometimes it's a counter trend. I'm more of a trend following trader, so when it's counter trend, I'll make a little bit, I'll get out. So it's really up to you how you want to approach this daily market analysis that I'm sharing with you guys. Okay. How can you follow me on TradingView? The TradingView link is here, the stream. So you can, if you jump onto that, then you can find my profile and follow, yeah, follow through that. Okay, or do jump onto the Discord. You can get the links there as well. Hey, Mad Maniac, how you doing? Okay, so a quick reminder is that Monday, this coming Monday, 1st of May, is Labor Day in Singapore, where I am located right now for now. So we won't be having a session. Okay, so this will be the session, and then we'll catch back up again on Tuesday next week. So a quick reminder to you guys on that. And also for all the community members, we do have a Zoom catch-up session where I'll be sharing with you on my possible setups before the FOMC decision on Thursday. So that's happening on the 3rd of May, on the night on the 3rd of May. So, if you are on the Discord channel, do check out that event. Make sure ideally you turn up for that. It's going to be a video on, get to know everybody session on Zoom. Then I'll share with you my analysis on the FOMC as well. Okay, so watch out for that. Hey, Mustafa, good to see you here. Good morning. With all that said, as we share possible trade setups, the usual disclaimer applies. Any information contained on this webinar should not be construed as advice and is presented as educational material only. Your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. The contents of this webinar is not intended to be a recommendation to trade a financial product. All right. So the worst thing you can do in this session is, as we go through any possible trade setups, you just put in the buy orders or the sell orders and then just let it run. Okay. It's not always, the trades are not always going to trigger, for one. Okay. We do look at very safe. I don't like to say the word safe, but very safe entry. So it has a big margin to it. Price needs to move quite a bit before we get in. So sometimes price does not trigger. And also, if you do jump into all the trades, then you're definitely going to be over trading. Because there is correlation between different trades. There are many different trade ideas that we get across. So don't blindly copy. Don't just jump in, and don't use this as a signal service. Basically, right? It's really here for you to learn how to trade better. Before you jump into any trade, do your own due diligence. Make sure you're not over trading. Make sure you're not taking on too much risk. Maximum risk at any point in time is that 1 to 2% of your overall trading account. Okay. Hey Jamil, good to see you here. Hey Zarparivo, Zo, good to see you here as well. I'm messing up nicknames, but as you would have. Okay. So with that said, let's keep going. What I've done today as well, I did sit down and went through and cleaned up all the charts. I came to the point where I realized the charts were, because we kept building on in terms of our analysis, we added lines, dotted lines, and fib levels, and trend lines, and all that kind of stuff. Got a little bit messy. So what I did, I just went through and I cleaned up all the lines across the board. Oh, the yen is still going, right? Ideally, this would give us a little bit of a cleaner chart. Ideally, it would help with a bit of clarity for you guys when we go through this session. Okay. The only thing I didn't figure out how to clean up properly is the dollar index chart, because I didn't want to delete this. But it does need a bit of a cleanup as well. Okay. So first off, let's look at the news. Yesterday, where is it? yesterday, right? Yesterday we didn't have the session, but what we did have was the U.S. advanced GDP number, which was a 2.9%. It came out at a 2.6, so it got revised down slightly. And they were expecting a 2%, so they were expecting a slight drop in terms of advanced GDP for the US, from 2.9 to 2. It came out at a 1.1. Okay, so not a good news for in terms of GDP for the US. It shows that the increasing rates, increasing of interest rates, or the interest rates which has been increasing, is starting to have an impact on the economy, right? On businesses where they are producing less because people are possibly spending a little bit less. There's more incentive to save your money because the interest rates are higher. So GDP took a hit, and that's pretty much or somewhat expected, right? That's somewhat expected. That all that talk about, is are we heading into a recession, or is the U.S. heading into a recession? If the U.S. heads into a recession, is that going to lead to a global recession? We're not in that recessionary phase yet. I think it was worse when we were in that region, that July August region time frame, right? But for now, we're still in the positive GDP number. So when is it signaled as a recession or technical recession? Is when you have consecutive quarters like that, consecutive quarters of negative GDP. All right. So when you have consecutive quarters of negative GDP, to the economists, it signals a technical recession. So alarm bells will start ringing a little bit. Are we heading into a technical recession? And that's where we heard a lot of chatter or news about a recession, a global recession coming out. Right now, although it's slowed down, but it's still in that positive range. So, not crisis adverted yet, but it's not as worrying. Okay, and also given that the FOMC is expected to increase rates one more time and then possibly pause on their rate increase, the risk for that recession seems to be reducing, right? Seems to be reducing. So with that, what we actually saw with this news at 8:30 last night, I'll zoom in a little bit. So 8:30, that's the point there, right? So we actually saw it drop. So the dollar index actually dropped, came down slightly, 101.30 before climbing back up again. Got resisted at that 101.7.80 range, retrace, now pushing back up. Okay, so remember again, the theme, right? I shared this several times. The theme of fundamentals for now is not so much employment numbers, it's not so much PMIs or even GDP. It's really down to inflation, CPI number, the core PCE number, and also the interest rates. Okay, so that's why you saw not a big push, and then a quick retrace all the way to today, now pushing back up again. Okay, so that was the news from last night in terms of the advanced GDP quarter on quarter for the US. Employment claims number, I don't pay too much attention to this because it is a weekly number. Every week it comes out, has some impact, but very unlikely to be long term or sustained impact on the prices. So I'm not too concerned about that. But it does show that unemployment claims is dropping slightly to 230K. Okay. I tend to use this a little bit more in the sense of getting a feel of unemployment, getting a feel of what the numbers are building towards, so that we kind of try and guess or try and figure out where non-farm payrolls is likely to be. Non-farm payrolls is coming out next week. Okay, so that's for last night. with the dollar climbing up a little bit and retracing, across the board. We didn't see too much craziness, right? So I'll zoom in. This is the Kiwi at 8 o'clock last night. We saw, came down a little bit, bounced back up. So it was still in that range. It was still choppy. It didn't break any levels, because the move on the dollar index was not particularly sustained. So now moving on to today. Okay, moving on to today, we did have the at 12 o'clock. It came out. It was a little bit surprising. I was up at 10, or I was watching my computer at 10, anticipating. So usually the Bank of Japan releases their monetary policy statement at between that 10 around that 10 o'clock period, 10 o'clock GMT plus 8. So today was a little bit later at 12. So that was a bit, we saw prices fluctuate around a little bit in the lead up to this event, but then it came out no change, right? No change in policy rate. And if you look at the policy statement, where am I? Here we are. Okay. So if you look at the policy statement, so this is what I do, right? When it gets released, I'll go through and read the policy statement. It's pretty much like a repeat of what happened, of what they were releasing the last time round. So no changes in YCC or the yield curve control, right? They didn't do anything there, and then also the purchase, the buybacks are still at the same levels. So because of that, right, markets were already anticipating no action to come from the Bank of Japan, right? It is the first meeting for the new governor Ueda, right? The first meeting for the new governor Ueda. Um, it was very unlikely at the first meeting that he was going to come out firing rockets and causing havoc right across the board. And also in the lead up, when he first came on as governor, he said, we're going to keep monetary policy the same for now. No, not intending to make any changes. Early this week, he also said, most likely, or we're definitely going to keep rates the same. We're going to keep the stance of easing policy the same. So, if you notice, Bank of Japan still printing money, still keeping rates at minus 0.1%, still controlling the YCC, compared to the US, the Australians, the Euro, the UK, compared to all the other major economies, they are all increasing rates. Right? They've long stopped or slowed down on their money printing. Right? The easing policies they have tightened with rate increases. So this builds that divergence between the Bank of Japan and all the other monetary bodies or more the other central banks. Okay, so what we actually saw with this news, and I shared with you guys on this in the group. I wrote up an article on this. I don't know why it's taking so long to load. So I wrote this up, right? So it got released this morning. We were looking for it to break up possibly to that 137 level or 138 level. And then I was also identifying the pound yen as a possible reversal if they did surprise markets, right? But so obviously they did not surprise markets, so the pound yen continued shooting up while the US yen as well shot up. Okay, so I was writing this was at 134. Right now the yen is at 135.75. Okay, so I'll put this link in there for you guys if you want to read more into the analysis. It's on YouTube and also on the community server. All right. So with this news that got released, what we actually saw on the US yen, look at that. All right, was at that news release, price was at one. So look at that. I'll zoom in just to show you here. It normally gets released at about 10 o'clock, right? About that 10 o'clock timing. So when it got delayed, what actually happened was we saw some price volatility. It went from 134.20 down to 133.40, and then after that bounced around in this region. All right, so there's that one impact of a slight delay of the monetary policy release. Some people would say that it came down to grab some liquidity before the news release, and then we saw this push up. Okay, so no action from the Bank of Japan is not a great thing. Is because it still continues on with that divergence between the central banks, and that's why we saw price go from 133.80 straight or pretty much straight up, hit 135.80. Now looks like it's pausing, hesitating a little bit there. Okay, I did get into a quick trade here. I can't remember what price. It came up to around that 135 range. I had my resistance level, so I got out. Then after that, the next hour, it started. I think next hour, or as it came very close to within that hour, as it looked like it was trying to break. You can see the body or the tail there showed that I was trying to break 135. I got into a bit of a speculative trade, and then I got out just before this, pretty much just before this session. I got out a lot earlier, at about 40 pips. So at about 40 pips, yeah, for the 135.30 region, 135.40 region, I got off my trade just because I wanted to prepare for this session here with you guys. Someone, I think Bill on the in the community actually asked, right? So why I got out early at 135.40 region was I was anticipating some retracement on the US yen. No, I didn't know whether it was, how much was it going to retrace by, or how deep it was going to retrace by. Right. So why did I anticipate a possible retracement? Is because if you look into this point here, so about 135.40, about there, right? It came into this level, right? It came to this level here. That's why I was thinking maybe it's going to hit this level here and then retrace, but it didn't. Okay, it continued up. One more reason why I thought it was going to retrace was it was starting to go out of that Bollinger Band at 135.40. It was way outside Bollinger Band. I thought, hey, close of the hour, just when I start the session with you guys, we might see this retrace back in. So I closed out my trade. Right now, it's gone out. It's way outside Bollinger Band. I did tell Bill that I thought it would get to 135.80 before retracing. Looks like that might happen, right? Might not retrace all the way back down, but might just sit right across, retrace slightly, or sit right across before possibly continuing up towards that 138 level with a bit of a hesitation at 137. I'll tell you more about that when we start looking into the dollar yen a little bit more. Okay, thank you. I like your explanation. A lot of loves from Malaysia. Thank you so much. I really appreciate that. So that's the yen news that we had this morning. Right, the yen news that we had this morning. I unfortunately don't pay attention to the press conference. I don't even think we have access to the press conference. Okay, and then we just had also today German preliminary CPI, right? It's not released yet. We had Spanish CPI. CPIs are still slowing down, so that's a good news. In terms of the Spanish, we want to know what the German number is going to be, and I wouldn't pay too much attention to the GDP numbers here. All the way through to tonight, where we do have the CAD with their GDP number. Again, I'm not too particular. The main focus for tonight will be the core PCE price index for the US, right? I know I've said this before, but why the core PCE price index? Because it is the Fed Reserve's primary inflation measure, right? Primary inflation measure. So you can see that last month it was zero point 0.6, got revised down to zero point 0.5, expected a zero point 0.4, came out at a zero point 0.3. This month, now they're looking at the zero point 0.3, holding at zero point 0.3. I think that if we see even a smidge of a slowdown in core PCE price index, so even a zero point 0.2, we could see some movements on the dollar index, and I think it could be to the downside, given that inflation is going to signal that inflation growth is slowing down. There's less need for further interest rate increases. That's why we might see the dollar slow down. Okay, so if it comes out at anything below 0.3, we might see the dollar index drop. Alternatively, most likely, given that they're anticipating it to stay the same, if it gets released at a zero point 0.3, we might see a little bit of an upside on the dollar index, because it's pretty much priced in that the Fed Reserve is going to increase rates by 25 basis points at the upcoming interest rate decision, which is on, where is it? Which is on Thursday, the 4th of May, right? So they're looking to go from 5 to a 5.25. And I think, if I'm not wrong, that has been previously indicated as the terminal rate, which means the highest rate or the target level that they're going to hit. Okay, so I think if core PCE price index comes in at 0.3, it's going to show some upside on the dollar index, support the upcoming interest rate decision, but it's going to make that interest rate decision a little bit interesting, because they might say, okay, we've done it, we've got 5.25, we might pause. We need to pay attention to what's the commentary on the FOMC on Thursday next week. Okay, so this is going to be interesting, something that I'll watch at 8:30 p.m. GMT plus 8 in terms of the core PCE price index. All right, so apart from that, then one thing that we've been going on about in the community is that it is the end of the week. Just watch out, end of the week trading. We do tend to see a lot of choppiness, a lot of retracements at the end of the week. And also, it is the end of the month, so it might increase the volatility in that sense. So it's end of the week, end of the month. Just be extra careful. Also, with the core PCE price index, a relatively big news that could, increase. I would say increase volatility, but it might not develop a strong directional bias. Does that make sense? Right? You might see increased volatility, but you might not see a strong directional bias. Thank you, Buba. I really appreciate that. Okay, so now looking at the charts, I would love to clear out some of these lines. I'll figure out how to do that later. But you see that the dollar index is pushing up. So we take these away. We'll try and take as many things away as we can. Okay, we'll take this away for sure, and this as well. Okay, so the dollar index is pushing up. I think it's going to come up, and I'll zoom out a little bit. You can see here, it's possibly going to come up to this range, that 102 to 102.20 level. I don't see it today, forming significant highs or having any breakthroughs, despite the core PCE price index to be released, right? Yeah, take these away for now. We don't need this, and we don't need this. Okay, so I've cleaned up the chart a little bit. 102 is a round number level that I'll be watching. And then I would have a level here, make a dotted line. So 102.20 as at the top of the recent range, right? Top of the recent range. So looking at this, we might anticipate that the dollar index could climb towards that 102.20 range. Okay, so today is the 28th of April. Right, on the 26th, we say it will come down to 101.20, when the light slightly beyond that before retracing back up. Now we say that dollar index could climb to 102.20, needs to break 102 round. I can't type today. Round number level. Thank you, Val. I appreciate that too. All right. So hang on, just let me close out my trade running. I close that out as well. Okay. Um, so when I close out trades, I lose track of what I'm doing. That's why I tend to try and close out all my trades before the session. Okay. So yeah, anticipating that the dollar index might continue pushing up, it does need to break above 102 to get to 102.20. We're looking for that push up. That is going to cast that overall bias right across the board for the other currency pairs or the other analysis that we're going to be doing. So now looking at the Kiwi dollar, take this away. Right, so I cleaned up the charts. Resistance level, big resistance level at 0.6224, 0.6225. The immediate resistance level is at 0.6161. We've got that trend line pushing, seems like it's keeping price to the downside with a support level at 0.6085, which we saw back in March, the 8th of March this year. Okay, so for this, looking at the dollar retrace a little bit, right? So it might retrace back down before continuation to the upside. I think we could be looking for this to, I'm still looking for it to trade down, right? So generally, I'm looking for it to trade to the downside. I would like to say that it's going to do this, right? But I'm hesitating because I don't see a reason why it should retrace from 6137 to 6150. Could be a brief retrace, right? So it could be a brief retrace before turning back down. In terms of a position, I'll be looking for a rejection of that resistance level, a rejection of that trend line to sell down. So maybe a 20 pip stop loss, a almost 40 pip take profit to the downside there on the Kiwi dollar. Right, so I'm looking for this to come up, test, and then reject to trade down. I think that's reasonable. Okay, although we do have our support level there, you could do that 60 pips, and then consider a possible hesitation at 6112 because that was the previous low. Okay, if it doesn't retrace, then I would say don't rush into a trade just because it's right in the middle. It'll be right in the middle of that support and resistance level. Okay, so 6150, sell below 6150, 20 pip stop loss, 60 pip take profit with hesitation at 6112. I say all that, but I forgot it straight away. Sell below, I'm terrible. 0.6150. Get it right? 6150, 20 pip stop loss, 60 pip take profit. Stop loss 20, TP 60, hesitation at 0.61115. Right, so hesitation at 0.6115. Go. So, if you do sell it down, then it's not something you set and forget. It might come down to this point and then bounce back up. So, something to watch out for. Okay, so that's the Kiwi dollar. Still looking to the downside, possible retrace before turning back down. If it closes like that, unless you're scalping on the 15-minute on the smaller time frame, I wouldn't rush into a trade. But if you're scalping, then you could look to continue selling it down. But I think most likely it's going to retrace a little bit before turning down. So the trade that I just closed out on my, just when I was talking to you guys, was the Aussie dollar. Okay, so the Aussie dollar, I did get in at this level here. So I just closed out my trade because I got in as it rejected. It was another quick 20 something 30 pip move. I think it was 30 pips. So I think I got in a little bit earlier, about there. It was within this candle that I got into a trade. As it pushed down, I got out. Okay, so I don't know which level here. So that was why I came down to this point and I wanted to get out my trade. On the Aussie, I wasn't sure whether it's going to, support level is near. Could bounce from here, could come down and bounce. We'll wait and see. In terms of the Aussie dollar now, so I've got my resistance level, big one at 0.67. I've got an immediate one at 6637, a support level at 6567 or 6565. With the way the Aussie is doing now, I wouldn't be looking to rush into a trade. I do think that it's going to come down and test this support level. All right, it's going to come down and test this support level. And this support level, same thing was what we saw in March, right? 8th and 9th of March, 10th of March. It came down here, hit and bounced. Okay, so March came down, hit this level, bounced back up, hit this level, and then had a good sustained bounce. So I'm going to be waiting to see what happens at this price level. If it does, it's only a 24, 25 pip to the downside. Wouldn't be able to get into a trade there. I wouldn't even scalp this down, right? Just because of that low point and then that key support. Let's see what happens when it comes down, hits that support, and then we're going to decide what happens here. Okay, if it does break down, then looking at H4 time frame, we do have another support level at about this point. Well, big one here. Hey Jamilu, how are you doing? Good to see you here. Okay, 6.3, and then I would say we'll have another one maybe at about this point here. Okay, so coming back to the current, the H1 time frame, if it does break down, then we could see it test 0.65. I like a nice round number, could test 0.65. Beyond that, 6.3 or 6.4. Okay, 6.392 or 0.64. So wait it out. Let's see what happens at this point. If it does continue trading down, then 6.565 is a decision point. Hey Bill, how are you doing? Hey, I'm not talking about you, Paul, but good to see you here. Okay, so Aussie dollar, I would say Nothing now. Wait for downside and reaction at 6565. For reaction at 0.6565. Hey Zion, how you doing? Down B. Okay, so Aussie, nothing for now. Wait for downside and reaction at 6565 support level. There we go. Dollar still pushing up. Kiwi still holding there. Aussie still retracing, most likely going to turn down. US yen. So this is the feature for today. The feature for today, US yen, big push to the upside. I think I was telling Bill actually, and hey Robbie, how you doing? Right, that is hit 135.80. We might see a retracement, like I was sharing with you guys. We're 20 minutes away from the hour close. It is this far away from the Bollinger Band, right? And you can see that in this case, when it's far away from Bollinger, slightly it'll push back in. Another example is, like this, where it sits right across, or in this case, a big push out and it retraces back in, right? Similar here, retrace back in again. And one last example, breaks out outside Bollinger, comes back in. So in this case, now I do anticipate further upside on the yen, right? But I'm looking for a possible retrace with the next key resistance at 138. So I was highlighting 137 because we do have, no, that's not valid anymore. No, actually this whole thing is not valid. Wait, okay, yeah, 136 will be there. There we go. Okay, so 61.8 is not valid. We'll take that away. That's the fib level, fib retracement for the longer term, right? It's coming towards 136.15, where it might hesitate. I think that a small retracement now, we'll see this breakthrough easily, but there is another hesitation level here at about 137. Okay, so I think Sharif asked, or somebody asked me in the community, whether it could get to 137. Very likely we'll get there. We might see it retrace before further upside. Okay, so to be safer, I would say let it retrace, push back up above 136, right? You could be looking at a almost 180 pip take profit to the upside. Stop loss, you could keep it reasonable, even at 50 pips is good, and then a hesitation at 137. Okay, and that's anticipating further strength on the dollar, that weakness on the yen, pushing up. I would like to identify, what I'm trying to do now is I'm trying to identify where it could retrace to. Right, I'm trying to figure out where it could retrace to. Yeah, I think it's going to be around there. So I think the safer entry would be 136. We could very well be looking at an entry at 135.80, that kind of thing. But I think reasonably, a safer one would be 136. Hey, Salhin, how are you doing? Salhin Hassar. Oh, I messed up my chart. Oh no, hang on. Bring that up. Okay. Sorry, one second. Bit of housekeeping. Okay, there we go. US yen, we're looking for it to could retrace briefly, needs to break rather Buy from 136. Stop loss 50. Take profit 180. Would be a very good trade to the upside. Oh, hesitation at 137. 137. Okay, so is that right? Yep, 136. Retracing a little bit now. Bounce back up. Buy 136. Stop loss 50 pips. Take profit 180 to the upside. Very reasonable. Okay, good stuff. Hey guys, remember if you like the session, if you find it useful, do help me out. Click the like, subscribe, rocket ship button. Would help massively somehow. All right. Pound dollar. So BL is on the session. Robbie's on the session. They know what I'm going to say. Pound dollar. Look at it. It's been choppy. Spike up, come back in. Spike down, come back up. It's been choppy. It's resistance at the 1.25 level is holding very strong there. The range is narrowing as you see this big upward trend line pushing prices higher, but 1.25 still holds. So I would say that given we're anticipating that dollar strength, right? Given that we're anticipating that dollar strength, we could see this turn back down, but it's very choppy. To be safer, I would like to see, with no news on the pound today, at this point, I wouldn't be too keen. I want to see this maybe technical retrace before turning back down, right? So a bit of a technical retracement to the upside, test this level, and then turn back down. Then maybe I could be looking for a sell below 125, so 124, 1.2490. Stop loss 20, 30 pips. Take profit could, you know what? Take profit would be 40 to 50 pips. That's more reasonable. I would say, go for this point, have a hesitation level there. But I think for today, if we can see this retrace, which it looks like it's possibly doing, test that resistance and turn down, look for a brief counter trend trade. That'd be a nice way to end the week. Haha, BL made money on the pound dollar. Very good. Very good. I've almost given up. I have it on my charts, I have it on my screen, but I'm not trading the pound dollar too much. A lot of other pairs which are a lot easier to trade. Look at the pound dollar. Please do what I say as during this stream. That'd be fantastic. Retrace, hit, and turn down. Okay. So 1.2490, 20 pip stop loss, 50 pip take profit. Pound dollar sell on rejection of resistance. 1.2490 stop loss, 20 take profit 50. Hey Cadillac, how are you doing? It has to break 1.25 tonight. Well, I would love to see that. I would love to see pound dollar break, but the next resistance is at 1.2550. More likely, if it does break, then I'll look for it to break and then sell down again. I wouldn't be looking to buy it up just because of how choppy, right? So the only point in time I'll be looking for as a sustained move to the upside if it closes above 1.2520, then there's not much space to that resistance. So I'll just be looking for it to climb up, look to sell it back down, anticipating that dollar strength. All right. With that, euro dollar dropping. Okay, euro dollar dropping because of news, Spanish, nothing else. It's a bit odd. A bit odd to see the euro dollar. A bit odd. Why I say it's a bit odd? It's a bit odd to see the euro dollar dropping that significantly while the pound dollar is climbing or climbing slightly or sitting right across. So that's the one part that's interesting. Okay. Um, Euro dollar, same thing, big trend line to the upside, holding this level. I would only be looking to sell the euro dollar down if it breaks below, and this is an ultra safe level because this is at 1.10. It could very well test this level and bounce back up. Okay, if it tests this level and bounce back up, then Paul is probably going to be right. We might see the pound dollar push up, but looking at the way the dollar index is pushing up, I would say that you could be looking, if you want to be a little bit aggressive, you could be looking for it to sell down below 1.10. Right, below 1.10, you could be looking to sell down with the next support level here at 1.0912 or 1.0910. So here we go. If you're aggressive, you could be looking to sell down from 1.0990. Stop loss about 20 pips. Take profit, that 70 pip move to the downside. The safer ones or the more risk adverse ones might be looking for it to break below 1.096 or 1.0970, and then your stop loss is going to be like 20 pips. Take profit about 50 pips. Okay, so there is an aggressive option to entry option, and then the more risk adverse entry option. Okay, I'll just highlight this point here first. So 1.09, below 1.0990, about 20 pips, about 70 pips. Okay, so euro dollar, sell below 1.0990, stop loss 20, TP 70. Okay, 990. Okay, good. So again, remember that we've just been looking at everything I've been talking about. Kiwi dollar, it looks like dollar strength, looking to sell down. Aussie dollar, looking for it to push down, dollar strength. US yen, looking for it to push up, dollar strength. Pound dollar, looking for it to test and reject, dollar strength. Euro dollar, looking for it to break down and sell down, dollar strength as well. It looks like we're very heavily biased towards the dollar strength. If it doesn't play out, then be a bit more flexible with your approach. Look at whatever you can do for a reversal, and I'll update you that as I look through the charts during the day. If I spot anything onto the Discord channel, so make sure you join. And then also, if you do jump into trades, don't jump into all the trades, right? It's all dollar strength. If you did Kiwi, Aussie, Yen, Pound, Euro, and the dollar doesn't strengthen, you're going to be wrong on all the trades. So pick one or two before getting into a trade, okay? Pick one or two to trade, not all of it. So US Swiss franc, big trend line pushing price down, resistance level at 0.9, so it's very close to that 0.9 resistance level. So immediate support at 0.8912 or 13. Then a key support level, which we saw it test and reject over 3 occasions already at 0.8860. So dollar strength is going to push this to the upside, but looking at that significant downside or downtrend on the US Swiss franc, I would say let it go up. Let it go up before looking for that selling opportunity. Okay, so this will be a little bit different. This is anticipating anticipating the dollar weakness. We could see this trace up, test, and then turn back down. Right? We could see this trace up, test, and turn back down. You could be looking to sell down from, I would say, it would be nice if we can be looking to sell down from 0.9. For the link is there in the, I can't post a link on Discord. I can't post a link on TradingView. It gets me into some kind of trouble, but the link is there in the signatures. Okay, 30 pips to 60, 70 pips to the downside. Right, so look for this to go up, test and reject 0.9, sell down. So 0.8980, we can do a nice round number there. Stop loss 25 pips, take profit 60, 70 pips. Okay, so 0.8988090 80 25 pips to 70 pips. 8980, stop loss 25, TP 70. Which pair have good potential for dollar strength? Well, what do you? Dollar strength. I like. I like the US yen. I like the US yen. For most definitely, my focus will be on the US yen for that push up, especially with dollar strength. All right, Buba. Not a trade recommendation, but do your own due diligence. But I like the US yen. US CAD pushing up. I've always been wondering whether this is going to retrace back down as it pushes up. Hang on, just thinking about some stuff. There we go there. As it breaks above 61.8. Right, if we see this break 61.8, we might see this trade up, although it's broken that structure already. If we did this, yeah, okay. So US CAD, I would say if that dollar strength applies, we could see this trade up. I don't think you'll get to 1.38 quickly. We do have some levels here to consider. So about 1.37, almost 1.3730. Okay, so it's a very interesting level here. Okay, US CAD is at a very interesting level. It's tried to break one time Wednesday, one time on Thursday, failed, retrace, now looking like good strength to push up. I would only be looking to buy up if it closes above 1.3660. Right, so dollar strength, then 1.3665, 60, almost 60 pips, take profit, stop loss 30 pips. Right, if it pushes up strongly, then you could be looking for a move of your stop loss to break even and then drag that take profit higher. Also bearing in mind that we do have a Canadian GDP number to be released, potentially showing a slowdown in GDP as well. This is a month-to-month number. Okay, so could see this push up. I would not rule out the potential if we see dollar weakness for this to push down, to reject this resistance, like what looks like is happening now. I wouldn't rule that out, that we could see this reject and turn down. A bit unlikely. Okay, a bit unlikely for this to happen. And also, if you were to sell down, it's not worth it. Okay, I would only start thinking of selling the cat down if it breaks below 1.3590. So it needs a lot of space. But it does look like it's more likely to push up on the US CAD. So 1.3665, 30 pip stop loss, 60 pip take profit. Okay, US CAD by 1.3665. 1.3665. Okay, same analysis as before. Then 30 pip, 60 pip take profit. Okay, fantastic. Good. Okay, now with that, we look at gold. Okay, why I want to look at gold is because there is that move that, the 2000 level I've been telling you about is now forming a very strong resistance together with that downward trend line and that 50% retracement level holding quite strong. I think that the days of further upside on gold seems to be limited. So I'll be looking, if it tests 2000, I'll be looking to sell down. If it breaks this trend line, I wouldn't do anything yet. If it breaks below 1970, then we could see significant downside potential to 1936 with some hesitation at 1955. Right? So in terms of likelihood, I think that it's going to range. It's still going to range in here. It's still not narrow enough, or I don't think it's narrow enough for a big break to the downside. I think it's going to do this before breaking down. Right? So it's still going to be between 1980 and 2000. Not really yet. I think next week will be interesting. To range between 1980 and 2000. Okay. Why I say next week is going to be interesting, just to preempt all of you, is that we do have the Aussie interest rate decision Tuesday next week. Well, with all the banks on holidays on Monday, that's why I'm not doing a stream as well. We have Aussie interest rates on Tuesday next week. We have the FOMC on Thursday next week, early morning 2 a.m. And then also we have the ECB with their monetary policy decision at 8 p.m., at 15 p.m. GMT plus 8 on Thursday as well, right? And with the press conference. So, and then non-farm payrolls on Friday. So it's going to be a big week next week. If we come to the point where, a lot of trades don't trigger, or you're not jumping into a lot of trades, don't stress out too much. I think there's some good opportunities next week. Okay. New hour, Kiwi dollar didn't retrace, it's still pushing down. Aussie dollar is still pushing down. Let's look to see what happens at that point. So, this trade didn't trigger. If you really had to, then you could do a small trade, a scalping trade to the downside. US yen showing that bit of retracement, right? Showing, you can see there, it's retracing a little bit, going to come down, test level, potentially bounce back up. Pound, look at that. It came up, didn't test as high as I thought, but it could have got in at that point. It's retracing back down. The choppiness still continues. BL just exit with 20 pips on profit. High five, virtual high five for BL. Good job done. Okay, so that That's actually a good analysis. I'll pat myself on the back on that. Just that it happened a lot earlier than expected. Euro dollar could happen quite, could be a trade for those aggressive ones, right? That you want to be looking into to sell down on the euro dollar. It's the start of the hour, so you just be careful of the retrace, but that could continue pushing down. Look for this to push up and then that rejection back down, US CAD forming that move to the upside. So we do have quite a number of almost immediate action that you can take, but just check that and make sure that do your own due diligence. Okay. With that said, any other question? I'm just looking at price moving and I want to start trading as well. So any further questions? If you've got no further questions, let's take this session beyond this 1 hour or slightly more than 1 hour now. Join the Discord group. We can take our discussions beyond this session. Share your trade ideas. Share your possible trade setups. Let's learn and grow together. It's absolutely free to join. I'll see you all there. Have a great weekend, a good Labor Day holiday for those of you who are celebrating or taking a Labor Day. And I'll see you all Tuesday next week, 3 p.m. GMT plus 8, same time, same place. Take care now. Bye bye.